Hey guys, it's 5:30 in the morning and it's time to talk about inflation. It is eating up the average person to the tune of about $276 a month. I'm going to read you a little bit of an article I printed out, and we're going to talk about how it's actually lying to us, and we're more than likely about to head into a recession. And then I think they're going to stimulate the socks off this economy with money printing, Jerome Powell going burr. And we're going to see a little bit of hyperinflation in the future. Let's check it out. This is off the Wall Street Journal. I don't trust them too much, but they've got some interesting facts, and we're going to cover it quick, fast, like a bunny. The average U.S. household is spending an additional $276 a month because of inflation that is rising in its fastest rate in 40 years. I'll do this the whole time. The squeeze stems from higher prices across a range of products and services, including cars, gasoline, and furniture. They're saying it's 7.5%. That's the first lie we'll talk about. That's the CPI. Go to John Williams Shadow Stats. I'll throw up a chart right here. All right. Consumer demand and supply constraints continue to push prices higher. This is a factor, but what's pushing prices higher, get this, is the value of your money, your fiat currency, going down. It takes more of this stuff to buy the goods and services because they don't buy as much. The MMT crowd don't want to talk about that. More money today. See, that's the thing. And we're all guilty of it. We want the government to spend money, but we don't want to pay higher taxes. And inflation is a way for the government to tax all of us without us voting for it. There's no hard sell for inflation. It just kind of happens. It's like that's how they steal your wealth. I know a guy personally. I was telling him about this stuff, the shiny, the precious. I said, yeah, man, gold and silver, kind of protect your wealth. Oh, you were saying that last year. I'm sticking $500 under my mattress. I didn't know what to say.
You're a big dummy there. I'm not kidding you. You're a big dummy. Dummy. Listen to a dummy. You dummy, you bigger dummy than my dummy. Dummy.
Whatever. Don't be that guy, okay? Because when this thing happens, when they have this melt up and everybody has this wealth effect. Oh, my 401k, I'm a millionaire. Everybody's going to be millionaires. And it's going to be like, well, what? I can't buy nothing with it. A jug of milk's $100. I don't know. This is supposed to, in the last 6,000 years, retain your wealth. Well, they used them for money back then. God only put so much of this in the ground. Governments can't whip it up out of thin air. I'll get off that. I'll keep going here. I went on a tangent there. I went on a rip about inflation because I really do believe that'll help. Where am I? What am I doing? The middle class, this is good. The middle class households spend a bigger share of their budget than others on gasoline. Now you can write this down somewhere and remind me I said it. $100 a barrel of oil will be a deal in the Thunderdome. In the future, $100 a barrel is going to be like, where is it at? I mean, I'm into that. It's going to be cheap. We're about to go to war with Russia, or somebody is, and it's going to screw it all up, and the price of oil is going to go crazy. I don't know that. I'm speculating. Don't listen to me. I'm not a financial advisor. I'm just trying to figure out what's going to happen in the future, and I'm putting it on camera. It's just things that are likely. This is the last thing I'm going to read you. Under 30 crowd. Now, you don't have a full deck of cards until you're about 30, okay? Sorry, you young guys. If you're watching this video, you've got more cards in your deck than most, but it takes a little while to understand. You got to, be late on a few bills and make some mistakes, and, you learn from those mistakes. and then you move on. But check this out. The under 30 crowd, delinquency rates among this group rose in the fourth quarter, suggesting that there may be challenges brewing for some younger borrowers. We live amongst borrowers. Everybody owes on everything. I forgot. I already ripped it off in the film, but I had to tape it back on. I'm not burning my clothes, but I am tearing the Communist Carhartt Clothing Company logo off of my shirts. They're enforcing mandates, and I don't stand for that at all. I'm for freedom, and I want to help you make money. There's nothing wrong with borrowing money, unless you're borrowing money to consume. Never borrow money to consume. I had some people come over to my property and ask me when I was going to build a house. When are you going to build a house? Because I built a big old shop, cleared my land, and they wanted to know when I was going to build a house. I said, I'm not. What do you mean? I said, I don't want to get in a bunch of debt. I want to buy rental properties that pay me to own them. You know, I want to invest in gold miner stocks, Bitcoin. I want to hedge against the dollar. There's so many things I want to do rather than live in a big, nice house and work to pay for that one house. Because if you get in a bunch of debt when you're young, just to keep up with the Joneses, you're not going to have any money to invest later. And I'm reaching somebody, because people that came over here are going to be part of the problem because they live paycheck to paycheck. They don't know any different. And at the end of the conversation, she said, well, you've got to get in debt. And I thought, who are you to tell me what I've got to do? And what are you teaching your kids? It's just crazy. So I was telling you about a recession earlier, and I want you to see the yield curve inverted yield curve chart. Let's say that right. Check it out. I want to read to you a little bit about it. The U.S. Treasury yield curve was recently inverted. This has historically been a very reliable indicator of upcoming recession, as it reflects investor sentiment about future economic performance. Since World War II, every yield curve inversion has been followed by a recession in the following 6 to 18 months. 6 to 18 months. 6 to 18 months. Recessions are naturally correlated with decreased stock market returns. I thought that inverted yield curve chart was worth spending a little time on. I hope it resonated with you. If you want any help protecting your wealth, you can find it in the description. And there's one tool that I use all the time to sharpen my knives and scissors and everything, because I love having a good sharp knife in my pocket. If you're not carrying a good sharp knife in your pocket, you ought to be carrying lipstick. But I want to show it to you. I'm not affiliated with this company at all, but I felt like I should bring this up because this broke. This little wheel right here broke in my favorite sharpener I've ever had. My brother-in-law got me this. I contacted the company, and they sent this in about 2 days, the whole side. Like it was just bam right now. I said, you know what? I'm going to show my peoples how awesome this thing is, because they seem to be an awesome company. Turn it on, drag your knife through it. Do that about 3 or 4 times, and you've got a sharp knife in your pocket, ready to go. Ow. 400-pound animals. It's awful. Y'all have an awesome day. I hope I made you laugh. Like and subscribe to the video. I will see you this evening.